What's up, money magnets? What a beautiful ending to last week. What a beautiful ending to July. It was a very nice correction. In a matter of 2 trading days, SPY gave us a $20 move with a high of 639.8 and a low of 619.2. Incredible rug pull style. This is what Uncle was looking for. So now that we have it, what is the next course of actions? What levels do we need to pay attention to? Very important. And because of this, I need to zoom out all the way back to the weekly chart. What does last week's candle look like? That looks like a bearish engulfing candle. Is that the top? That is the big question. Is that a top, the top? As long as it's a top, is it a top? And if it is, there will be a lot more downside incoming. But what attracts me the most right now, as far as context goes, is the fact that SPY broke down the 5 WMA, the 5 weekly moving average. You can see since April, just like the 5 DMA on the weekly chart, SPY has used the 5 WMA as stepping stones, stairway up. And for the first time in months, it has closed below this moving average. I have to mention, when I see stuff like this, I have to mention the past. When was the last time this happened? The last time I saw a close below the moving average like this was February 18th. When we closed below the 5 WMA, it led to an incredible move to the downside. And it wasn't until we recaptured this 5 WMA back on April 21st, we didn't put a bottom and we didn't head to new all-time highs. It wasn't until we recaptured it. But now we broke it down, very similar to how we did back on February 18th. How will we know to stay bearish this week? We will know to stay bearish this week as long as SPY can stay below that moving average. Because like last time, SPY retested that moving average as a resistance multiple times, but never officially recaptured it on the weekly chart. As of recording this, that moving average is around 727. It could move up a little, could move down, but you have to check it when you have time during trading hours. And you watch where it's at, and as long as SPY stays below that 5 WMA, we can expect more downside. 627 is that level as of recording this. So now that we know what the main pivot level for the week to watch, we also need to know how to trade this. We need to make money. So it closed at 621.7 last week. It recently lost another fib level, which is at 622.7. That is the level I'm watching for tomorrow, for Monday. If SPY wants to go for a bounce and retest the 20 DMA as a resistance, it needs to clear 622.5 and 624. That will put 626 and 628 in play to retest the 20 DMA. I have a fib level around 630, so for me to really trust the recapture of the 20 DMA, I'd like to see 630 recapture as well. But it will not be possible unless 622.7 and 624 can recapture to go hit those levels to the upside. As long as below 622.7, in the short term, SPY remains bearish because that keeps the breakdown from Friday intact. As long as the breakdown from Friday stays intact, which requires SPY to stay below 622.7, we can expect more downside incoming with 620 and 618 in play. Now 618 is a fib level, so a loss of that level would be very bearish. It was also a previous buy zone from July 16th, a strong buy zone. So if 618 is lost, this correction continues, and I would not be surprised if we go retest the 50 DMA as a support. As of recording this, the 50 DMA is around 611-ish. I do have a fib level at 613, and then the 50 DMA around 611.29 is the exact number. And I tell you, if we lose the 50 DMA as well, that will be extremely bearish. But I wouldn't be too surprised if we get some type of bounce there, because usually even when we get moves to the downside, it usually doesn't just go straight down. We usually get some type of bounce to give us a lower high before the next leg down. So we'll see if the 50 DMA can serve as that support level. But like I said, I also have 618 and 613 to watch. Trust no bounce unless 622.7 and 624 can recapture. Here is QQQ looking very bearish as well. We had the first close below the 5 DMA last Thursday in months, and it led to a lot more downside, breaking down my next fib level around 556.5, and it also hit another previous buy zone around 551.5. So I do have support from here at 553 and 551.5. Multiple times that that level has shown buying pressure, and it did last Friday. So if bears can break it down and turn it into a resistance, that would be a big win for the bears. We do have to be careful when we see stuff like this, because it could be liquidity just below it. That's where traders would set their stop losses, and they tend to go stop loss hunting sometimes. The market makers, they love to take out those stops before they push it to the upside, and even if they break it down, they'll still take out the stops. So watch that 553 and 551.5 level very carefully, because below it is bearish. I would not trust a true bounce unless 555 and 556.5 can recapture. We did lose that level, so a recapture would help the bulls out a lot, at least for a bounce, to put 569, 560.4, 563 or higher in play. Here is Tesla, looking bearish as well. I had that macro level, fib level at 309.3-ish. It used that level as a resistant, pushed down pretty strongly, and it also closed below another fib level around 306.8. So from here, if we are to be bullish, 303.5, 305, 306.8, 308, and then the fib level 309.3 all must recapture. I would definitely favor a bigger bounce above 309.3 to 314, 315.5 or higher would be back in play. But if bulls fail to recapture those levels and they manage to stay below the 306.8 level, I am going to lean overall bearish. Now from here, I do have support at 302, 300.4 and 299. If those levels fail this week, more downside incoming. The next macro level, fib level I have is at 295.5, and then I have 293, 291 and 289 below for more support to the downside. Here is NVDA. Looks like it's consolidating between two of my levels right now, 172 and 172.5 and 174. Watch the break of this range. Still overall using the same levels, but the context is a little bit different. So a recapture of 174, 175.5 is definitely needed right now to put 177 and new all-time highs back in play. But with this pullback, it looked like it does have some room to go more. It might need to consolidate a little bit, but if it breaks down 172.5 and 171, there's a good chance we drop all the way down to 168 or much lower. 164.5, it's not looking too bad, but 168 definitely possible if we can break down 172.5 and 171. Here is coin, looking very bearish, but Unco has some new levels to watch. 316, 319 and 320.7 are resistant levels that I have. If we're going to get a bounce, because it's been looking very bearish, and see if the dip buyers will buy this dip. If we do, we need to clear those levels, 316, 319 and 320.7. If there is more downside incoming, I have next support levels at 312.5, 311 and 309.3. Those levels fail, more downside incoming. There's a very good chance we go hit the 300 level or lower. Here is IWM, looking bearish. Next support I have is at 214.6, and below that I have 213, 211 and 209. If 214.6 fails, more downside incoming. But we can get a bounce, because we did drop a good amount, maybe a little relief bounce. And if it is a relief bounce coming, 215.5, 217 and 219 must recapture. Above 219 is a good chance we get more than a relief bounce, and then we possibly could try to put in a bottom to go for new highs. But overall bearish below 217, loss of 214.6 would be bearish follow through, but above 217 and 219, definitely a bounce is possible. And last but certainly not least, here is the VIX. I'm very happy right now seeing it go up like this, because that means volatility is here, and the higher it goes, the better for all of us traders. So let's hope it continues to go up. Next resistance at 21 and 22.5. If those levels clear, that is what we want to see for more upside, to put 24 or higher in play. But if volatility starts to decrease, it doesn't mean it's completely gone. It could also mean that the SPY is going for a bounce. But the more this goes up and then SPY does actually go for a bounce, the more we give VIX room to move. So a volatile VIX is really great for the market, for us traders. And if it is pullback time, 19.3 must fail to put 17 or lower back in place. 17.5, 16, 14.7 and 13 will be my lower targets. And that's what I have for you guys today. I hope you guys are enjoying your weekend, and good luck this week. Let's kick some market makers behind. Peace.